Hello everyone, it's Chris Kapches, President of Chestnut Park Real Estate. I'm here today to give you your October market report. And as I did in September, I'm following some themes, 5 themes that have emerged in this marketplace. I'm going to do the same today as well. These themes are the average sale price, where that's going, comparing City of Toronto activity with the 905 region, demand supply tensions, which is the crucial component of this market report, list price compared to sale price, and of course what's happening in the case of condominium apartment sales. So if we start with average sale price, in the month of October we hit a new record average sale price. This is for the entire Greater Toronto area. And it's primarily driven by what's happening in the 905. Average sale prices are accelerating much quicker in the 905 than they are in the 416. So in October, we find ourselves with an average sale price for the entire region, including all condominium apartments, of $1,155,000. That's correct, $1,155,000. Clearly, Toronto is becoming one of the pricier cities anywhere in the world. We're not the priciest, but we're definitely up there now. Affordability, of course, is becoming an issue when you have numbers like that. And of course, they're driven primarily because of our lack of supply, which I'll get to in a moment. Up until October, the price point had kind of stabilized at around $1.1 million, and then all of a sudden we see this pop in October. The reasons for it, and again, primary reason is supply. So let me turn to that. The tension between demand and supply is literally beyond critical. I think it's reached a dangerous zone. Our supply has dwindled to the lowest level than I can recall, certainly based on our population growth, that I've ever seen before. We're down to a little over 7,000 properties available for sale in the Greater Toronto area at the end of the month of October. We did get 11,000 plus new listings, but that's nowhere near enough to meet the demand that's out there. We've seen regularly multiple offers on almost every listing that comes out, particularly ground level listings, semi-detached, detached properties. The demand is just simply that strong. As a result of that, I think the price points went up because people are prepared to pay anything they can possibly afford in order to get the few properties that are available to them on the market. So the supply-demand tension is really becoming acute out there, and I don't see any immediate let-up of that tension. We need more supply, and even if politicians at all levels, municipal, provincial, and federal, were to get together and start getting shovels into the ground, we wouldn't see any relief for at least 2 years, if not longer. That takes us to another problem and another theme that we're witnessing in this marketplace, and that is the difference between the list price and the ultimate sale price. And for the second month in a row, and in this case, it was even more astounding than it was in September. For the second month in a row, every trading district saw ultimate sale prices, on average of course, ultimate sale prices exceed the list price by about 107%. And if you got into some neighborhoods, some districts, like for example, semi-detached properties in the eastern districts, average sale price was 115% higher than the list price. This is a phenomenon that we've never experienced before, and it's of course driven by the fact that we have very little supply and almost record level demand. It can only get worse because, as I said, with only 7,750 properties available to the entire Greater Toronto trading area in the month of November, the pressure is going to be even stronger and more powerful on those prices, which we're probably going to see go up. So it's quite clear now, it's a cliche, but I'm going to repeat it. The asking price is merely a starting point for where we're ultimately going to finish in terms of the final sale price. The other area that it is worth noting, a theme that we've been following, is the disparity between the 905 and the City of Toronto. It has continued, but that disparity is beginning to shrink, and it's shrinking for a couple of reasons. The cheaper, affordable housing that was available in the 905 region has now become less affordable as more people have sort of engaged in a diaspora out of the city of Toronto into the surrounding suburbs. As a result of that, prices have gone up, and they've gone up fairly substantially, and they continue to go up. If we look at the price increases in the 905 on a housing type basis, they're still going up faster than in the city of Toronto for a variety of reasons. One of them, of course, is the prices in the city of Toronto are already so substantially higher that it's very hard for them, given affordability, to move much higher. But they certainly are doing it in the 905 region. And as a result of that, I think that pop to 1,155,000 was driven by that experience. It's going to continue into the month of November, and then into December, and then into the early months of 2022. But that disparity is gradually going to shrink as those prices continue to go up in the 905. So soon we may see almost a similarity between what's happening in both of those regions. One of the things that we're definitely starting to see is an increase in condominium apartment sales in the 905. They were ultimately restricted to the city of Toronto, and in particularly the Central Core. That isn't the case anymore. So as a result, we see condominium apartments rising in the 905 by 17% in terms of their average sale price, and in terms of their sales over 20%. So an interesting factor taking place there, which we hadn't witnessed before. And then speaking about condominium apartment sales generally, they have come back very dramatically. People are now less concerned about the density and the concentration of people in high-rise towers, sharing elevators, living in smaller spaces. Of course, one of the reasons for that is the fact that they're simply that much more affordable than any of the other housing types. If we look at detached properties in the city of Toronto, starting to approach, believe it or not, as an average sale price, $1,800,000. Semi-detached properties are doing the same thing, getting up to almost $1,400,000. When you have those sorts of numbers, affordability plays a huge role in who can buy and who can't, and they look for cheaper types of accommodation, and that is condominium apartments. So those 5 themes, as I said, I'll repeat them: what's happening to average sale prices, the disparity between City of Toronto and the 905 region, both in terms of sales and in terms of the average sale prices, supply-demand tensions, crucial, absolutely crucial to where the market is going, list price versus ultimate sale price, also driven by the supply and demand tensions, and at last the resurgence of condominium apartments. So quite exciting stuff that's happening in the market, a little unnerving at times, but still very exciting. You can check out with a little bit more detail in our market report that's on our website. And I'm very excited to tell you that I'm looking forward to see what happens in November, because I think we're going to see a little bit more of this activity that's causing the market to behave in ways that it never has before. So until then, stay safe.